Yeah, I mean, I genuinely mean this. I don't think I'm not blowing smoke. I think you guys have probably been in DeFi and crypto potentially longer than, although we have some team members who've been in there since the beginning, but the space has changed so much. And I think 90 freaking 5% of it is honestly gambly, it's degenny. It's like, I don't see an at scale use case for most things. Obviously, I mean, DEXs, obviously, as major tools, but there's all these interesting things that people come up with. And then we discovered Pendle actually quite a while back. And I'm just like, genuinely, this is a product that the space needs, especially as sophisticated investors, maybe even institutions or people with more capital or less. Like you can actually see how much capital is deployed in different wallets. It's really cool to see. Um, but you guys' product and products, I'm really excited to share it with someone who hasn't even. I would pause this video if you're watching it and just go check out Pendle. We will have the links below and just explore the white papers. I think it's a little complex when you first maybe read through it, but I think I'm hoping that. And by the way, we got Dan Wong on the show today, head of growth at Pendle. We're going to ask some questions and we're going to get. I'm going to try to simplify Pendle as much as we can for someone who's maybe looking to get some fixed yields or maybe looking to play with that protocol and put their stables or some more stable assets at play. So, Dan, thank you for being here.
Yeah, thanks for having me.
Pendle. Let's talk about Pendle. What is Pendle? I think the white paper breaks it down beautifully, but I know some people don't like to read white papers. So if you had to explain what is Pendle, what is the solution we're offering to investors?
Sure.
What is it?
Sure. Pendle is a yield trading protocol. And by the way, beautiful introduction on the use cases. Before, thanks for the shout out.
Yeah.
Anyways, Pendle is a yield tokenization protocol and a yield trading protocol. So there are two steps to Pendle. Well, to how Pendle works. We tokenize the yield away from anything that generates yield, and we trade that yield separately. If you are in finance, this might be familiar to you because it's pretty much the same thing as bond coupon stripping, where we strip away the coupon away from a coupon bond, and the coupon is traded separately. Now, imagine that coupon trades at a very volatile rate, which is crypto rate. And people can speculate on that rate. If they think the rate is going up, they can buy just that rate. If they think the rate is going down, they can, people who are holding that yield-bearing asset can sell away that rate at the current prices. So that's roughly how it works. And once you strip away the yield from a yield-bearing asset, you're left with something called a principal. And it's kind of pretty much like a zero coupon bond where at maturity, which is at the end of the term where the asset becomes whole again, the value of the asset at maturity is known. So that's how we kind of achieve fixed yield on that asset. And that sounds confusing.
And I already know what's
TLDR
going
is
on in people's heads. They're like, wait, hold
yep.
up. What did Dan just say? And maybe if you're a little, if you're
Exactly.
in traditional finance, you kind of get some of that. Simply put, why doesn't someone just put their stables up on Aave and maybe get the posted 6% on their stables? Let's just use Aave as a really simple example. Hey, I could get 6% on USDC at least today, maybe not tomorrow. Why would they want to go through the complex process of having you guys strip the yield and like why would they do that?
Yeah, I was gonna get there actually.
Yep.
So there are a couple of use cases. Now, all what I just explained is kind of just how Pendle works in a nutshell. But as a user, you have two paths you get to choose, well, three paths, but like for the sake of simplicity, two paths you get to choose.
Okay.
You can, if you think that the Aave yield goes from 6% to 10% in the next couple of months because the yield is going up. And how do you speculate on that? Well, frankly speaking, it's not possible right now. If you deposit your money into Aave, it goes from 6 to 10, you just earn more yield. Now, on Pendle, what you can do is you can purchase purely the yield receivables. Let's say 6%. With $1,000 capital, that's $60 in yield. Now, you can purchase this if people might be selling this $60 in yield for like $50, for example. And you can buy $50 to get $60. So that's a decent amount of yield. Now, if you think that the yield that is actually going to generate over the next year is not going to be $60, it's going to be 10%. It's going to be it's going to be $100. Now, would you pay $50 to get $100? That's 2x in capital. And whereas if you put that same $1,000 into just Aave, you're just earning $100 in APY. Now, that is if you have a view on where the yield is going to go. Then you can buy the YT and speculate on it. Mind you, YT extends to YT basically stands for yield token, which represents again the yield of a given asset. This extends to any kind of yield, including points, which is a bit of a fugazi the past couple of season in DeFi. But yeah, so people have been speculating on the value of the yield, receivable, and points of the asset.
Got it.
Conversely, Aave yield is 6%, but it floats. It goes from 6 to 4 to 3 to in the bear market 2 to in the bull market 10. Now,
Mhm.
some people might not be a big fan of this volatility, and you can go on the other side of the coin of yield token, which is PT, principal token. This is basically the fixed yield portion of of the asset. Now, I kind of briefly explain how all of it works, but you don't have to know all that actually. All you need to know is PT just generates fixed yield powered by the underlying yield bearing asset like Aave USDC, for example.
Mhm.
And yeah, you just get fixed yield on top of it. The thing is, the fixed yield can sometimes go higher than what Aave is currently offering. So, for example, a lot of people are speculating that the yield from Aave is going to be very high over the next couple of months. People are loading up on YT. Without going too much in details, that results in a very high fixed yield for PT, and people can lock in that rates, and that's exactly what's been happening with assets like Ethena assets, where SUSDE actual yield is probably like almost around 6 to 9%, but on Pendle sometimes it's offering
Like,
about 10 to 12% in
yeah,
fixed
I
yield.
saw 12 or 13% or something today. I think I saw, or maybe I was looking at another asset, but yeah. So plainly spoken, and we'll get into this stuff because I do like to talk about the risk of like, okay, well, fixed yield sounds great, and I lock it up, and then I know people in DeFi because they've probably been burned before. It's like, well, if I lock it up, what does that mean? And like, can I remove it? What do you mean by lock up? They're locking that fixed yield.
Sure. By locking that fixed yield, I mean just the rate is being fixed at that rate, but you're not locked in anything. In fact, you can actually exit a position early with a caveat. Um, Again, drawing analogy to finance, you buy a bond for a 5% yield, and let's say in a 10-year bond, let's say next year you want to sell it, but the bond yield goes up to like 7%. Your bond price actually lower at that point.
Got
You can exit it, but you can exit it at a loss, a slight loss. But if the bond price can also go up, so you can exit early and profit early. Your
Yep.
call. But what's to note is that at maturity, the value is known. So that's
Yep.
if you want to hold until maturity, can if you want to exit early because you are in you need emergency capital, or you want to just take profit early because the bond price went up, you can as well.
Yep.
Same thing goes for PT. The PT price can go up, can go down, but all you need to know is that it trends upwards to maturity. You can think of it as like start from here, ends here, but along the way it can go up and down. So
Yep. Yep. So good. And we'll get into some of this stuff. I'm gonna circle back and we're gonna go one layer simpler, as in like, hey, I'm a user. Um, like ultimately, I got a bit of a follow up here, but before we do, what inspired Pendle? Like, what inspired the
yeah,
the Pendle to be
um,
built?
so it started off, not sure if you're around crypto already, during the food coin saga back in 2020, 2021.
Yep.
The food coins were offering, 4 or 5 digit APYs, and the APYs go away in like a week or two. And yeah, we were at Pendle, we were kind of like struggling to figure out ways to lock in that rate, and figure that there's currently no solution in DeFi right now. So we kind of went back to drawing board and look into trying to draw some inspirations from finance, and we came up with two potential models. First, the interest rate swap model. Second, the one coupon stripping model, and basically try to implement that into crypto. And that's kind of how Pendle was born, because we ourselves tried to lock in the 4 or 5 digit APYs from
Yeah.
meme coins,
How did that
and
work?
yeah,
Not too well.
couldn't figure out a way. So
Yeah.
so yeah, we built it. And we launched in January of no January, sorry, June of 2021. And by the time by that point, most of the APYs have already gone away. Sort
Right.
of like the fading end of DeFi summer. But there were still
Yep.
some interesting yields for us to support, and we went ahead and supported them. And Pendle V2 launched in 2022, and then the product hasn't really changed that significantly ever
No.
since. Just small iteration ever since.
Mhm. That's when you know I think you have something good, is you don't have to make big iterations. What's so how much value locked is in Pendle right now? I actually forgot to check before this.
Close to 4.5 billion.
Nice. Nice. Amazing.
Yeah.
You've probably seen a lot change in the landscape. It says you guys were doing all the meme coin stuff. I think you said 2020, 2021. So
Yep.
it's been three, four, frank. Is it 2025? It's been a while. Um,
Yeah, so it
I think
was
the
4 years.
space has changed a lot. I feel like I remember when I got into crypto, it was so many like cartoons, and even the dexes were all cartoony. I mean, of course, it was like Uniswap, but still, to me, like from a background in finance and traditional investing, I was like, is this video games? Like, what is this? I just feel like there's more and more protocols that are attracting like serious investors, and they actually have like a serious message. And it's like, I don't know. I'm excited by it. A lot has changed. What have you seen change? Like, what were some of the biggest changes in, we'll call it, the DeFi space?
Oh,
Maybe that's
sure.
from the user psychology and how they think, or it's from the investor, or it's from the protocols. But like, I'd be curious to hear from a guy like you and you guys who've been building in the space consistently. What have you seen change, and for the better, and maybe even for the worse?
Yeah. I find mostly for the better. I think people are getting more aware of what's happening. Just give an example. Impermanent loss used to be a concept that people were like, wow, this thing is so complicated. What is this?
Mm,
And that's kind of like in DeFi 101 right now.
yep.
So I think people education have been simplified. And also people tend to be more sophisticated when it
Yep.
comes to understanding
So much good content out there
crypto in
too.
general.
Like,
Yeah, so
there
many
was
good
no
content out
content 3
there.
years ago, 4 years ago. Now it's
Yeah,
like anything you want,
exactly.
you can find.
And because of that, the competition, at least from builder side, has been much stronger. In a sense that I think in terms of UI, UX, the barrier to entry as a builder has never been higher
Love it.
because people's standards for how your app looks
Yep.
is there. I know there are still protocols that look clunky as hell and still works, but
Mhm,
in general,
mhm,
the new protocols you see nowadays have sort of some level of standard when
mhm,
it comes to how the app look and feel. You no longer get the VFAT. I'm not sure if you remember back in
mhm,
2020.
mhm.
Yeah, VFAT style protocols. You don't really
Right.
see that nowadays. I feel.
Yep.
And
I think,
but I think overall it's for the better.
it's
Ease of
for
user
the user, it's
experience.
better. For you guys, it's
Yes, yes.
worse as in terms of
Of course.
increased competition, but we love it because it just creates
Yeah,
innovation and better products. Like, bad
yeah,
products just don't make it very far nowadays.
exactly.
I love it. Um, and then being in it, and I'm always curious to hear from builders, like over the next 12 or 24 months, what do you think is the trend? Um, and maybe we'll not say real world assets, because I think most people do see that trend. But like, apart from maybe some of that, like, where do you see the trend going? Or maybe you do want to speak on real world assets, but where do you see things going?
Yeah, yeah, sure. Um, yeah, you said no real asset.
We
That makes it
can, if it's
difficult.
a sub, if maybe it's a a subcategory of
Sure.
RWAs. It's a pretty
Um,
big category.
okay, I roughly somewhat like real world assets, I would say, but it's kind of different. So, um, at the end of the day, we kind of want crypto to be sort of like an infra layer of applications building on top of just the blockchain. And I think one of the first ways to do it is just to sort of like close that gap between off chain and on chain. And I think RWA is kind of like the first step to it, where people bringing off chain yields on chain.
Mm,
Now, what we are trying to do is kind of tangent to that, where we are trying to bring off-chain yields, on-chain yields off-chain. Basically, we're trying to offer our yields outside of just crypto funds and crypto participants.
okay.
Um, I think one of the best things about crypto is because of its efficiency, the yield that we can offer is much higher, and also because it's just to a large extent also because it's much more speculative.
Yep.
And now, Pendle is offering sort of like a fixed rate, and we find that this caters to um, a risk appetite of a lot of people outside of crypto. So
Yep.
what we're trying to do is just get as much of our yield possible off chain to funds that are not even exposed to crypto. Now
Got it.
that brings our you know addressable markets much larger than just simply crypto.
Yeah.
So that's
Sounds
what we're working on.
complicated from like a logistical, is it
Yes,
like a legal nightmare
yes.
when you start going
It
off
is
chain?
it is a yes, it is a logistical and legal nightmare.
Yeah,
But honestly, the bulk of the load is kind of like 50-50. It's on us and also on the fund that's trying to
got it.
um get into to use our product.
Dude, very cool.
But as long as we can get that conversation going, I think that should be pretty interesting. And I don't think we are the only people doing it. As far as I'm aware, Ethena in their roadmap article Convergence also talk about this. We also talk about this in our roadmap article Zenith. A lot of the lending rates are also basically bringing on-chain money off-chain. Protocols like Maple, for example, bringing on-chain capital and lend it out to off-chain actual projects.
Got it.
Yep, it's kind of like RWA-ish, but I think
Sure.
RWA is kind of like closing this whole big space into a bubble category called
Yeah.
RWA. But like, there's so many things that we can do. Basically, just bringing in the on-chain utility, off-chain, to well, what I call it, actual use cases aside from just financial speculation.
Yeah.
And and I think that's pretty something that I'm very excited about. And
Yeah, that's really interesting.
um,
I
yeah,
like it.
from like a builder perspective, we are connected to quite a lot of people building such use cases, and they're very passionate about it. Again, these kind of things are a logistical and legal nightmare,
Yeah.
which I find that it's kind of counterintuitive to crypto, but I feel like if we really want mainstream adoption, this is kind of like a hurdle that we want to go through. The
100%.
nightmare is there for first couple of years or two,
100%.
and as people get more comfortable with the infrastructure, I do foresee that the legal stuff to ease a little bit as there are more processes being put out for crypto. So yeah, it's just kind of like a hurdle that us first adopters have to go through.
Yeah. I'm so happy you're saying that. So I'm I'm in this world and reading and studying and talking about this all day long. So I'm kind of in a bubble of like, oh, everyone just knows crypto and DeFi. I had a really big aha moment. We're looking to raise funds for this real estate project. This is not Cryptolabs, or this is a personal project that I'm working on with a friend. It's a fairly large project. It's actually 2/3 of it is run by this billionaire we met. And so through that network, as we've been trying to raise money, I've probably talked with, I don't know, 20 people who are perfect investors for this real estate project, all exited companies for like 100 million plus. 2, 3, 4, $5 million for them isn't a lot. And I noticed the introduction, the way I was being introduced was like, oh, this is Lucas. He's in crypto DeFi. And I could see there, I stopped being introduced that way. And I'm very aware of how I introduce the space I'm in because they're all skeptical. Now, these are smart guys, savvy investors, hundreds of millions of dollars to invest, and they think crypto is, or DeFi is Bitcoin and scams. Like that's kind of the first thing they think.
Relatable,
And so I had an
relatable.
eye-opening moment of like these guys don't understand it, but to sit with them for 15 minutes and explain to them protocols like Pendle or even like Aave and like really dexes and really simple stuff, their eyes start opening of like, oh, I didn't know that, but the barrier for these guys, and they're 50 plus for the most part, is so high. And I'm like, I cannot wait till these
Exactly.
people with hundreds of millions of dollars who really dislike banks and hate, honestly, traditional finance is just the best thing they can do, which is why they look for side deals and like really cool real estate projects where they can get a better return and work on stuff that actually inspires them. I'm excited for those guys to find platforms like Pendle and have the UI and the actual experience, just seamless, and for them to get onboarded because I think that's where like that's where the space takes off. So I'm happy to hear that, funds and you guys are kind of working on all this really awesome stuff. And sounds like some other builders are too.
Yeah, for sure. I think just because of the addressable market is so much bigger,
Yeah,
and the yield that we're offering is so much higher, and I find that the risk nowadays is, well, people tend to get a little bit more understanding of crypto mechanics now, to
yes.
not build things like Luna, for example. So
Yeah,
yeah, these kind of risks tend to fade out eventually as the industry matures. So
got it.
I think it's just a matter of time. This
Yeah.
whether it's within my lifetime or not, hopefully it is.
Hopefully it is. Hopefully it is. I think it will be. It's moving fast. So that wraps up today's conversation. If you have any questions for today's guest on any topic we discussed, or maybe topics we didn't discuss, do leave them in the comments below. If you have a recommendation, or if you'd love to see someone on this show, from a guest, from an expert, from an investor, from maybe someone who's built or is involved in a protocol, do let us know in the comments below. And again, if you enjoyed, like this video, subscribe to this channel, and we'll see you in the next.